Hi everyone, let's have a look at my macro and high time frame bullish and bearish Elliott Wave scenarios on Bitcoin. Starting with the macro bullish scenario where we're looking for a 5-wave structure in a 1, 2, 3, 4 and then a wave 5 to the upside, where the most common target for a wave 5 is between 98k and 174k. In this wave 4, which then is already finished, we have a WXYXZ corrective structure, which is a valid structure for a wave 4, bouncing perfectly on the 0.5 Fibonacci taken from the low of 2 to the high of 3. The week low, the exact week low, was made on the 0.618 Fib time, also taken from the low of 2 to the high of 3. And we also had a volume peak at the lows, as you can see over here, which can signal a potential reversal area for eventually more upside, just like it did with wave 2 over here. This was the COVID dump, high amount of volume, which was then the beginning of a bigger move in a wave 3 to the upside. We had two potential trading setups over here. The first one was to enter above the 0.5 because a high time frame wave 4 is not allowed to close any candles below the 0.5, which didn't happen, so the stop loss was here looking for upside, should already be break even. And basically the more safe and also second scenario is to add on the dips, expecting more upside for eventually that wave 5 all the way to about 100k. If we then go to the bearish scenario, we're already looking at a finished impulsive structure. So wave 1, 2, 3, 4, 5 to the upside over here, which is then the all-time high. Now it has to be said that this wave 4 over here is very short in time compared to this wave 2. Usually a wave 4 takes more time to form compared to a wave 4, but as you can see, it's clearly not the case. This wave 4 is a lot shorter than this wave 2. However, you could potentially move this wave 1 a little bit to the right side as well as the wave 2 to basically the highs and the lows that you see over here. However, that is something for another video. So in this particular scenario, this is simply and remains the high of wave 5, whatever you do with this wave 1 and wave 2. So the high is already in for this wave 5 at 69k, looking for a downside corrective structure, which is a more common structure in a zigzag, which is then a 5, 3, 5 wave move to the downside. So instead of a WXYXZ in the bullish scenario, which is a more rare corrective structure, we now have a common one in an ABC. Now in this particular scenario, we are looking inside the wave B, the red wave B, because the red A over here is already finished. We then have a 1, 2, 3, 4, 5 wave move to the downside in a wave A. And now we're looking for a 3-wave structure in a wave B. Now looking at the lower time frames, or basically the high time frame, the daily time frame of this move to the upside, it looks to be an impulsive structure. So then again, we can look for a zigzag in a wave A, 3-wave B, and another impulsive structure in a wave C. Now personally, I think it is very nice for wave A to finish around this white box over here. This white box was support and eventually can now turn to resistance, which I think is a very nice simple support resistance flip. In this area we also have the confluence of the value area low of this high time frame range, and we also have the 0.5 Fibonacci taken from the all-time high to the low at 15.4k. So some nice little bits of confluence in this area for maybe the high of then a wave A. Looking then for a 3-wave to the downside in a wave B corrective structure, then the 5-wave to C, where for me a very interesting target is going to be between the golden pocket, between the 618 at basically 39k to the 786 at about 50k. And the main reason for the interest in this area has to do with the volume profile that you see over here. So I pull the volume profile from the high time frame range, and you can see the red line, the point of control, which is the level where most of the volume has been traded in this area over here, is sitting at exactly the same level as the golden pocket, the 618. At 39k. So this is massive resistance for the Bitcoin price, and the 786 level has confluence with the value area high of the volume profile at 50k. So basically the 618 over here, the golden pocket area, as well as the 786, very interesting for potential swing shorts, which then also gives the setup over here, right? Entering somewhere in this area, stop loss somewhere safely above, looking for a move to the downside, where if we are looking towards the downside, we are looking towards this target area over here. Now, just in case, you do see the invalidation over here, but this invalidation is only valid if price would do this right now. Then this ABC in a wave B is invalidated, but if we get this structure over here, this invalidation level will be removed at 15.4k. So just to make sure you understand why the invalidation is in the middle of the screen. And if we then look at wave B being in and we're looking for a move towards the downside, then this area is very, very interesting support, massive support for Bitcoin, where if this wave B high is going to be around the 786, the most common target area for this wave C is between the 1 and the 1.236, which is between 11.5k and 8k, taken from the high of, basically the all-time high, to the low of wave A, to then the potential high of wave B around the 786. That's my estimation at the moment. You can, however, play a little bit with the target. So if the high of wave B is going to be around like the 618 or the 66 Fibonacci, you can see that the target area for wave C is moving to the downside as well. But I do like the target of the 786 because now the golden, or the golden pocket over here, taken from the low to the high, all-time high, is exactly inside this target area for wave C for some very interesting confluence, and the value area high of the volume profile taken of this range of basically the whole of 2018 and 19. So a massive, incredible amount of volume inside this area, and the value area high of that volume is crossing right through the golden pocket as well as the confluence area for wave C. So incredible support around the basically 9 to 10k level, but also incredible resistance between about 40 to 50k. So this is the macro bearish scenario. If we then zoom in to the daily time frame and actually have a look at what has been going on, I have an unlikely scenario and then a bearish and a bullish scenario. And the unlikely scenario is the one I'm going to start with, which is the 1 2 1 2. So we then have a wave 1, which is then a 1 2 3 4 5 over here in a wave 1, followed by a wave 2. Then we have another wave 1, followed by another wave 2, and then we get a very big 3 to the upside, because then you expect this to be a wave 3 in blue of a bigger wave 3 in green. So you want to see a very impulsive move, shattering all the resistance area, and volume has to go basically vertical to the upside. Now, there's a couple of reasons why for me this is very much an alternative scenario. And the first one is that the blue wave 2 is larger in time, longer in time than the green wave 2. So the length of this wave 2 in blue is longer than the green wave 2. However, this blue wave 2 is of a lower degree, because we talk about the green wave being a 1, 2, then we have the green 3, green 4, green 5, and then inside the green 3, we have a 1, 2, 3, 4, 5 in blue, meaning the green count is the higher degree count and the blue count is the lower degree count. And usually a lower degree wave 2 should be shorter than the higher degree wave 2, but that is not the case. So that makes this scenario quite unlikely. Secondly, the volume is not really in favor of a very bullish 1 2 1 2 scenario as it stands now, because the volume, while price is making higher lows and higher highs, the volume has been going down. As you can see over here, it's actually getting pretty low, while we have been ranging over here as well. But volume is going down, which is not really supporting a potential 1 2 1 2 scenario. And lastly, this wave 2 over here is very short in time. It only reached the 0.236 of wave 1, so a fib time taken from the low to the high of 1 to then, and then double click at 1, sorry, so from the low of 1 to the high of 1 and double click here, put on the 0.236, and you see this wave 2 is very short. Usually a wave 2 is about the 382 fib time, but in this case it is a very short wave 2 around the 236. So something to remember as well, just in case. And in this particular scenario, at least if it would be true, then the most common target for a potential wave 2 retracement is between the 0.5 and the 0.786, which is between 24.6k and 21.5k. The 382 is a rare target for a wave 2, and of course you can already see it has hit the 382, so maybe you could say the wave 2 low is in. However, again, this is a rare target for a wave 2 and not a common target in comparison to these ones over here, and the 886 is also a rare target for a wave 2. So this is currently, as it stands for me, an unlikely scenario. If we then go to the bearish scenario, which is matching the bearish macro scenario, where this is then potentially a wave A followed by a B and a C, then in this scenario, what we're looking at is again a 1, 2, where nonetheless this wave 2 is still short. So we have a wave 1, 2, but then 3, 4, and 5 are already finished. Now in this particular scenario, this 5-wave structure is then finishing either a wave 1 in the bullish scenario or a wave A in the bearish scenario. The main thing with this scenario is that this wave 4 is very short. That's my main problem, as written over here. This wave 4 is very short, even shorter than this wave 2 over here. And usually, as I already mentioned on the macro, a wave 4 takes more time to form compared to a wave 2. So that is quite uncommon. Not impossible, but uncommon. But this is then the high of a wave 1 or a wave A. And now we are looking for a corrective structure to the downside. The fibs that you see over here are taken from the 15.4k low all the way to the high of wave 5 over here at 31k. And then for a wave 2, again, the common targets for a wave 2 between the 0.5 and the 0.786, which is between 22k and 18k. But if we talk about a wave B, then the 382 as well as the 886 are also common targets for a wave B. So the 382 and the 886 are rare targets for a wave 2, but these are common targets for a wave B. Doesn't matter, wave B can have all of these targets. So if you have now a bounce on the 382, imagine price going down, bouncing on the 382, it is from a probability standpoint and Elliott Wave theory standpoint more likely it is a wave B and then an A, B, C than it is a wave 2. So I think that is important to remember as well. So we have to wait and see how this price action, of course, is gonna form, because then we go to this scenario, which I still think this is my preferred scenario, even though the lower time frames are not looking that bullish for potentially an impulsive structure to the upside. However, as long as the invalidation at 25k is not hit, this scenario is still very much valid. And in this scenario, we're looking at this to be a wave 1, then a wave 2, then we have a wave 3, then we have a sideways corrective wave 4 structure for then a bigger wave 5. Now, if wave 2 is very short and deep, reach this 0.5, and of course it is very short in time, wave 4 tends to be long and shallow. And it is indeed long in time, and it is shallow. It reached the 0.236 taken from the low of 2 to the high of 3, as you can see with the wick over here, like basically last week, a couple of days ago. So this is an important target area for this wave 4. And in this particular scenario, because wave 1 is an extended wave, so not wave 3, usually wave 3 is the longest wave in an impulsive structure, but in this scenario, wave 1 is extended. And therefore the targets for a wave 2, 3, 4, and 5 are changing. So a little bit of a more rare target for a wave 2 if wave 1 is extended is the 0.5. It is a target nonetheless, so that is why it is on the chart and still valid. Wave 3 does not have a target if wave 1 is extended. Wave 4 most common target if wave 1 is extended is between the 0.236 and the 0.382. However, the invalidation for an impulsive structure is at the 25k level, so that is why the 382 actually doesn't matter. You can see the white box, it goes till the invalidation. That is when this scenario is still valid, because in an impulsive structure, wave 4 is not allowed to cross the price action of the high of wave 1. So that is important. And then we expect another wave 5 to the upside, and this wave 5 to the upside has a maximum target of the 1-to-1 over here, and this is the 1-to-1 of wave 3. So wave 5 has to be shorter, this wave 5 has to be shorter than this wave 3 in price, which means the absolute maximum target for this wave 5 is at 31k. However, if price gets over here, then this whole scenario is invalidated. So this is important, where from these lows over here, of course, price can still, on the lower time frames, wick below this low over here. As long as it doesn't hit the invalidation at 25,288 on the Coinbase chart, this scenario is not invalidated, and we still have potential upside to go for this wave 5, where I still think a very interesting target is going to be the highs of this range in 2022, which is sitting at a level of 32.4k. So that could be an interesting level for then a liquidity grab, and then the beginning of a corrective structure to the downside to correct this impulsive structure that we had over the past months already, right? That could be very interesting. And then this 5-wave move, 1, 2, 3, 4, 5, is either in the bullish scenario a wave 1, or in the bearish scenario, a wave A. And then to the downside, it's going to be either a wave 2 or it is going to be a wave B. We have to wait and see. I hope this video was very helpful for you and that you learned something about the macro and the high time frame structures. Please check out the most recent update. There we go. This is the right end screen. And yeah, please subscribe. Thanks for watching, and I'll see you at the next one. Bye-bye.